Well, July was a big month for Lyft. Almost 14 million passengers used the ride-sharing service, according to a report from Recode. And joining us today to break down the numbers is Adam Zuckerman, founder of Fosterly. Adam, great to see you.
You too.
So Recode reported 13.9 is the actual number that Lyft used in its monthly letter to investors. How does this stack up with months past?
Yeah, it's great news for them. They're certainly growing. It's a 12% increase over the month before, and it's not just the number of rides that people are taking. Their metrics are great all around. From earlier in the year to now, they've actually increased their monthly active riders by more than a third.
Yeah, and let's dig into some of those numbers a little bit more too, because as you mentioned, the letter has tons of numbers in it. We've got a run rate revenue hit 500 million, also hit more than $2 billion in net ride value. What does all of this mean? Let's break down some of these stats that look so good.
It's complicated and it's a lot of fun to be honest. So their 2 billion net ride number, that means that they're pulling in a total revenue from those people that are taking trips, and that includes the tips that people leave, it includes everything. The $500 million number is the number that they're actually pulling in. So they're doing fairly well from a perspective of revenue. They're still running at a loss, but they're tracking towards profitability. The issue is that you have to look at the entire situation from an entire vertical perspective. They have 17 cities where they're pulling in 250,000 rides or more, but although that's a great number, if you look at their largest competitor, Uber, they just hit 100 million rides in New York City alone. So there's a big gap in the leader versus Lyft, but they're growing, which is fantastic news.
And you just hit on such a big point, and that's the fact that while this is good for Lyft, it's still the company's still so relatively small compared to the giant in this market, which is Uber. And of course, we just had that news around Uber basically selling out of its China stake. Do you see them ever really going head to head? Can Lyft ever really truly catch up to Uber?
Well, in a weird way, they're actually partners now. So the news that of the $35 billion deal between Uber and Didi was really great for Uber. They've essentially said, okay, the two of us are going to have a monopoly in China, and now they can refocus their efforts on the United States and other key markets for them. But what a lot of people didn't realize is that Didi has a $100 million investment into Lyft. So there's a question of now, how is Lyft going to react to this merger? Or, on one side says it's a merger, another one says it's an acquisition. You can look at it either side of the coin. But the question is, can Lyft actually catch up? They hired a company called Catalyst to help them shop deals around to see if they're going to be able to go public or be acquired. And it's interesting for the timing because Uber is expected to go IPO next year as well. So they've got about a year and a half that they may have to make or break. Can they close the gap? Arguably, probably not, but it doesn't mean that they don't have an opportunity to be picked up by someone in acquisition to give some good returns to their investors.
Yeah, certainly. Well, I guess the race is on. Adam, thanks for joining us and breaking down all these numbers. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.